the chaos throughout the world. He's, in my view, destroying what made America great, and by association, the rest of the free world. 90% of the companies out there exploring are going to come up blank with nothing. That's just the odds.
95% of the junior miners out there are not investable, and you really should be looking for the 5%. Does that make sense to you? Brent Cook joins us today. He's an economic geologist and the founder of Exploration Insights, where we're continuing our coverage at the Precious Metals Summit at Beaver Creek. If you're wondering how to pick successful miners, well, Brent has had decades of experience doing exactly just that. He's going to share some of his exploration insights with us today. Thank you for joining us.
Yeah, love to see you again.
Yeah, good to see you, Brent. The gold price has had a tremendous run, as you know. So has silver, $40 an ounce, not seen since 2011. Gold price, unprecedented levels. People are wondering if now is the time to take profits. Are we at that pivotal inflection point?
That's a real tough call. I deal with that now because I've got a number of stocks I've picked that are up, 500-600+%.
Yeah.
And the issue I deal with, well, these are still the best quality assets out there. And do I sell them and buy something lower? What do I do? So what I have been doing is taking my initial money off the table, and I'm looking to re-employ that into earlier stage projects, meaning exploration, basically.
So you think the earlier stage projects haven't had their full run yet?
Not yet. That's a much more difficult thing to get into. I mean, you've got 2,000 plus exploration companies scattered around the world. Each one of them is going to tell you they've got the next best thing. So it's going to take a lot more due diligence. But I do think it's a good time to start looking at companies with cash, intelligent management who technically know what they're doing and know how to deal with the financial market and have some sort of backing behind them. And are looking for something that's significant.
Right. Well, the VanEck Gold Miners ETF, the GDX index, is up 90% year to date in 2025 as of today, mid-September. What typically follows that kind of a cycle? Is it the junior miners, the smallest explorers that run up after the producers, or do they rise at the same time usually?
What usually happens, and what's happening now, is the majors run.
Yeah.
Then people start looking at the mid-tier companies. We start getting a lot more M&A going on, which we're seeing now. And then we start looking at the micro-cap companies, the ones that don't really have a defined resource they can point to, or are just barely starting to define it, but don't have the technical studies behind that to prove the economics behind it.
Why do the majors typically run first?
It's the safest place to go.
Okay.
They got production.
Because you would think if you want safety, you would just buy gold, the bullion, right?
Well, yeah.
If you want upside, for me, let's say if I want to be exposed to the mining sector, I want the most upside possible. So I would get gold, and then I would get my risk or leverage with the juniors. And I would skip the, mid-tiers and producers altogether. Does that logic make sense to you?
Not really.
Okay.
That's not what I did.
Okay.
The majors, I owned a couple, they've done well.
Yeah.
I moved into some mid-tier companies that have some production, or at least have an asset with a technical study on it that tells me what the grade is, what the tons are, kind of what the mining scenario is going to be. Those have done quite well. And now the juniors, it's their turn to come in, and we're going to see a lot more money coming. The thing is, it's such a small sector, really, compared to the high-tech sector, AI, et cetera, that it doesn't take much money coming into this to really ramp these mid-tier and micro-cap companies up, eh?
I think I've been interviewing you, Brent, since gold was at $1,800, $1,700, just below $2,000. I think back then, people were talking about when gold would hit $2,000. What is your reaction to gold hitting $3,500 and now $3,600?
I recall those days. I remember you had people on, so-called experts.
Yeah.
We're going to see $3,000, $5,000, $10,000 gold. And at that time, my comment was more or less, if we do, it means the shit really hit the fan.
Yeah.
And the dollar's down, 12% this year? Gold looks much better right now. And I think that's why we're seeing federal banks around the world come into it. We're seeing crypto guys come into it, I think. gold looks like a very safe haven right now compared to the US dollar.
So you're saying gold has run up this year as a response to Trump's trade policies and the uncertainty around that?
Well, that and everything else he's doing, yeah.
Yeah.
I think that's the majority behind it. I mean, we've also got a 30 plus something trillion deficit. That's an issue. Rates, I suspect, are going to start coming down later this year. That's positive for gold.
Right.
But you're seeing countries and people around the world starting to back off America in every way, including the US dollar.
Well, how would you explain gold to an investor who hasn't entered the space yet? What role does gold serve in one's portfolio in 2025?
Well, it's no one's else's it's not a liability. You own the gold, it's worth something for thousands of years. Gold has been a currency, a stable currency that you could always buy and sell regardless of what your government does to your monetary, your fiat currency.
Right.
So in that respect, it's the safest thing out there.
But have you considered that maybe the volatility that this year and the last year for the gold price has kind of has changed the narrative of gold in a sense? Safe means up maybe 3%, down maybe 3% a year, but up 50, 60 something percent, 70% in a matter of 12, 18 months. That's now a risk asset by most measures, right?
By most measures, yeah.
Yeah.
But I don't see it that way.
No.
I don't. No, I think, given what I see going on, all over, a number of different aspects globally, I think gold is going to do relatively well compared to most other things you can invest in.
Yeah.
That's my opinion. And silver, I think metals as a whole, copper, rare earths, metals are starting to come into the forefront finally.
Based on the conversations you've had, do you recall talking about what has driven this price rally in gold and silver? Who was behind this price rally? I know you talked about central banks buying gold. What about the silver front, for example? Was it mostly the retail investors or the institutions coming in?
I suspect that's mostly retail.
Yeah.
Silver is historically much more volatile up and down than gold because it's more of a fringe asset in my view. Like, I'm not a big silver buff. I mean, it's fine, it's great,
right,
but it's not something I really go after as opposed to gold, which I know has value.
Okay. Well, trouble has already occurred around the world, to put things more mildly. What's next for the precious metals now that we've already had this turbulence and now that the price has already reflected, this scenario that we've described?
Well, you mean already the chaos has already occurred?
Yeah.
It's occurring and it's going to continue to occur. And I think as things start to look worse in the U.S. in terms of the economy, the jobs, that sort of thing, Trump is going to become more desperate and it's going to get weirder. And I think that's positive for assets outside the U.S.
And I guess negative for the dollar.
I would imagine, yeah.
Yeah. You mentioned earlier that M&A is happening more now. I'm wondering why it's happening now at $3,600 gold and not $2,000 gold.
Unfortunately, most companies are not proactive, they're reactive. And now that the gold price and metal prices are so high, they start stepping in and seeing that.
Well, that's interesting. Do you think that maybe when gold was at $2,000, which was like maybe last year, the industry didn't believe it would stay that high and they were kind of waiting for a pullback, for more shopping to start? Do you think that was a mentality a year ago?
I think you're right. I think to a point it was, is this gold price real?
Yeah.
I mean, they're still using, in terms of reserves, under $2,000 an ounce for their reserves. And I think, and investors as well, you saw a lag between the gold price going up and the ETFs following it. That was like a 6-month lag.
Sure.
I think people had to see that, no, this gold price, it may be here to stay, and started coming in. I think major mining companies are the same way. Plus, their share prices are higher, they're making more money, and they can do more acquisitions.
Well, you talk to a lot of miners and companies. What is their decision-making criteria when it comes to M&A? What do they look at in the environment in the macro landscape before making a decision on whether or not to start deploying their cash on acquisitions?
Certainly jurisdiction. You want to be someplace that you're comfortable with, hopefully someplace you're already working.
Yeah.
Some sort of synergies, it'd be really good. You don't want something complicated in terms of metallurgy or mineralization. You want something with an exploration upside. That's really important because right now you're probably paying close to full price for what's defined. But if the company has a large land package and can demonstrate that there's other targets out there, because usually when you find something, you find more.
Yes.
So there's the upside that they're not really paying for.
Right.
So that's what they're looking for.
Do the large producers have certain financial metrics that they have to meet before they start acquiring companies? Meaning, let's say they have to have a certain free cash flow yield, meaning they have to have a certain amount of cash in their books, meaning they have to see a certain gold price before they're comfortable getting into the market?
Each company is different, and I'm not, I don't work for the major mining companies.
Sure.
But they're looking for an IRR at a reasonable gold price or metal price of 20% plus is what I think.
A major news item came out today. Anglo and Teck merged.
Yeah.
It's the second largest mining merger of all time, I believe I've read. And what was your reaction to that news?
I know Anglo was looking to buy something.
Yeah.
I didn't expect it to be Teck. I think it was great. It's going to domicile in Canada.
It's a merger of two giants. Is that going to start trickling down now to the mid-tiers and the producers buying the smaller juniors now?
Yeah, I think so. I think the mid-tier companies are looking at each other because they want to get bigger. I mean, something like, I don't know, Coeur Mining might want to buy Hecla,
right?
Which both silver kind of companies, double their size, whatever it would do. Those sorts of things make a lot of sense.
The last major bull run in the metals was 2011. Back then, there was a lot more hype around M&A. I wonder why that same sentiment isn't present right now. It's starting to pick up, but we're not seeing the same amount of activity now.
Not yet.
Yeah.
Not yet. And I think they're a lot more cautious.
What's different?
I think they overpaid for a lot of things and bought things that were not that good as quality deposits, and the shareholders just trashed them. They were pummeled for making bad mistakes. So I think they are being a lot more cautious in what they buy these days.
And between copper, silver, and gold, which of these metals do you like the most right now?
I would say gold.
Yeah.
And by association, silver. Copper, I think, is going to do really well. Rare earths, if you're in the right place with the right type of deposit. In the U.S., uranium. So, that's kind of where I'm at.
Gold we've talked about. What is the narrative behind silver? Is it a monetary metal or is it an industrial play right now for you?
A little of both. I think it's always been called the poor man's gold, and that's kind of how I view it. I'm not a big silver fan per se.
Yeah.
But if a silver deposit makes good money, it doesn't matter to me. It's all about the margins.
Okay. And would you say that your preference is the same for the miners as well? You like the gold miners more than the silver miners and the copper miners?
Yeah, I mean, it's harder to find a pure silver play.
Yeah.
Most silver comes associated with base metals and or gold.
Yeah.
So pure silver plays are tough to find.
Okay. Well, walk us through some of the processes that you have as an economic geologist when picking an asset.
I think the first thing I want to understand is what is it, if I'm looking at a company and the corporation, the people behind it, do they actually know what they're looking for? That sounds silly, but it's not. A lot of people go out and just start, drilling. Where do I find a porphyry copper? Knowing what they're looking for, I mean is, okay, you're going to go find a porphyry copper. Given the location you're at, the infrastructure you're going to have to build to get there, the metallurgy you expect, what grade and tons do you need to actually make a relevant discovery? And too many companies are just drilling holes and getting basically building big anomalies, but not building a resource. So the company has to know what they're looking for, looks like in terms of the ultimate economics behind it. They need to be financially competent, meaning they have the ability to raise money at the right time, and they've got people behind them that will step up and put money in again, that sort of thing. That's kind of the big picture I look at. And I'm only mostly interested in a discovery that's going to be good enough that someone else is going to buy them out. I don't generally, exploration companies, people running that are not the same type of mentality you need to build a mine. So I don't want to see a bunch of geologists build a mine, for instance. I want to see them find something good enough that a mining company comes in and buys them and builds
How
them.
often does that happen?
Fairly often, for a good deposit.
Right.
Yeah, I mean that's the goal there.
Yeah. I've heard the opinion that 95% of the junior miners out there are not investable, and you really should be looking for the 5%. Does that make sense to you?
I wouldn't say non-investable, but I mean the facts are gold's not selling for $3,600 an ounce because it's easy to find.
Right.
I would say 90% of the companies out there exploring are going to come up blank with nothing. That's just the odds. With Exploration Insights, with Joe Mazunda writing, now doing the letter, we've been able to pick companies that look good to begin with, but along the way, realizing what that fatal flaw is, why it's not going to work, and still make money on the run up before a stock collapses.
Kind of like venture capital when you think about it. That's what you are. You're picking a bunch of things. Maybe 9 out of 10 don't work out, but that one that does could get you 600%.
Yeah, that is the fair comparison.
So mentally, you're ready for your pick to fail.
Yeah, and I'm looking for the fail. I want to know before anyone else why it's not going to work.
Is there a certain point when you realize that they're not going to find anything and you should bail?
Yeah, there usually is. I mean, it could be drill results, it could be metallurgy,
Yeah.
it could be
Well, let's say they have several seasons of no, updates or progression on their drill results. Their PA isn't giving any promising, results from the last assessment. At what point do you say, all right, that's enough, it's time to walk out, or maybe just give them more time?
that's a case-by-case basis.
Yeah.
So that's a tough call, but one thing I did learn working with Rick Rule was hope is not an investment
Okay.
thesis in this sector, right?
Yeah.
So what my initial thesis was as to why I bought this stock, if that fails, I'm not going to hold on and hope that something happens, or that the next drill hole disproves me. I analyze the data, decide what I need to see for this to work, and if that doesn't work, I'm out.
A term that's used a lot in this industry is economic feasibility. What does that actually mean?
Basically, that you can build a thing and make money.
Yeah, that can you be more specific? How does the math work out there?
All right, so to define a deposit, it's going to cost you tens to hundreds of millions of dollars to bring it to a pre-feasibility or feasibility stage, depending on that. And that gets you to the point where you generally know what it's going to cost to build it, what it's going to cost to mine it, what it's going to cost to extract the ore, and what you're going to get paid for that. And that's, all that has to be positive, and then you've got your margin, and you want a decent margin there. That's what you're looking for.
Okay, but that's based on a lot of assumptions and a lot of guesses on how much it may cost to actually drill.
Well, that's what the studies are for. That's when we get to the pre-feas or the feasibility stage, that's what the details are worked out as to what's the process methodology to extract the gold from the rock or whatever. Like, can you just throw cyanide on it and leach it?
Right.
That's much cheaper than grinding it and floating it and sending it off somewhere, or much, much cheaper than if you've got to use some sort of high pressure temperature to extract it. So all those things factor in.
Well, let's use a real life example. Can you give us a stock that you like and tell us why you like it?
Sure. I got to think of one here. All right, so one of the stocks that I've done really well in is Southern Cross. In Victoria, Australia, they've made a great discovery. The continuity of the vein, it's a high-grade vein system. No resource yet. The continuity between drill holes is good, which is what you want to see, because when you're mining underground, you don't want to go through dead zones if you don't want to mine waste. So that's looking good. The stock's done well. It's now over $1 billion market cap, Canadian. But I think it's a deposit that's good enough that someone might come in and buy it.
Okay.
Another one I'll give you is a copper play in Arizona. Arizona Sonora Copper, ASCU. They've got a nice deposit. It's permitted, almost totally permitted. They got the water, they got the metallurgy worked out, the grade's good, everybody's on board, the locals are on board, and it's going to be producing cathode copper in the United States. That's a really nice deposit. And again, if they build it, they'll make money, but I think someone's going to come in and buy that one out because it's such a good deposit.
Yeah, so you don't actually care about zoning and permitting times and jurisdiction risk and all that, because you're betting on a takeout. You're not betting on this company to take it into production.
I would prefer they didn't.
Yeah.
But before someone buys them, they need to see that it's permittable or it's permitted. I think that's the key here, is if just prove that you can permit this to build it, and we'll buy it.
Here's a question.
It is close.
Yeah, does the success of permitting change if, let's say, the deposit changes hands to a larger company? Meaning, does a larger company that owns this asset now, do they have a higher chance of getting permitting rights on that particular deposit than a junior mining with fewer resources?
In theory, it shouldn't matter.
Okay.
But oftentimes, depending on where you are in the world, if a big company comes in, they're a target.
Yeah.
For whatever reason, and it may be more difficult. And again, if they come in and they can deal with the government and respectfully, and everyone's on board and like that helps a lot as well.
Okay, so you've named two companies you like. Let's change the script and talk about some companies you don't like. You don't have to give names, but just give us an example of what to look for, red flags to look for when you're looking at a company and either A, they don't have anything in the ground, or this is not economically feasible, or we should just stay away.
Okay, there's a company with a resource in Canada. It's a gold copper. It's a gold resource. It's reasonably low grade, like 1 point something grams, but it's deep. You've got probably 300 meters of waste rock to move. That all costs money just to get to the deposit. The deposit itself consists of a number of discrete veins that the mineralization within them is very erratic. So even if you remove the waste rock, get to that, it's going to be difficult to know what grade you're actually mining, where you're mining it, and how much barren rock gets thrown in with what they're going to call ore.
Yeah.
So you've got a big strip ratio, waste to move. You've got erratic gold mineralization, and you've got veins that are separated by barren rock. And when you're mining big scale, bulk mining like that, it's really difficult to differentiate the grade from the waste when you're mining 5-10 meter widths.
Okay. And in terms of cost management, just looking at the financial statements, how do you know if, let's say, one company is managed better than another?
We'd like to see that most of their money is spent in the ground as opposed to corporate G&A or promotion. I mean, there's a number of companies out there that spend $500,000 a year plus on promotion, but they're not really doing anything. I mean, that works. I mean, you can play that game, but that's not what we do.
Right. Okay. And they say that management track record is important for picking a company. How important really is it?
I think management's history is really important to know what they've been involved in, how they handled failure, that sort of thing as well. Because most people who are serially successful, they've had a number of failures too. But how they handled that is kind of important. And,
right.
There's always going to be some new guy that's never found anything that makes some fantastic discovery. Well, he's got no track record, or he or she's got no track record, right? So,
yeah, he could be the next Mark Zuckerberg of mining, right? In the sense that you look at all these tech giants, a lot of them were founded by people with zero management experience.
Exactly.
How do you bet on that?
Yeah. I mean, the guy at Snowline done really well.
Sure. Okay, great. Thank you, Brett. Where can we find your work, and tell us a little bit more about what we can find?
Right. Well, Joe Mazumdar now writes Exploration Insights.
Yeah.
He, in my opinion, is the best mining analyst out there. The website is explorationinsights.com. There's a number of videos up that he's done and I've done, stuff he's written. I think if you contact him via the website, he'll give you a sample of an older letter to see what it does. But these are very technical things. And what he's doing is telling you what he's buying with his money and why. He's not getting paid by anyone to say anything, et cetera, et cetera.
Yeah.
So it's very honest, very good letter. And you can find me on Twitter sometimes.
Okay, sometimes. We'll put the Twitter or X handle down below, so make sure to follow Brent there. Pleasure speaking with you. Take care.
Good to see you again. Thank you.
Thank you for watching. Don't forget to like and subscribe.